I introduced my next guest to you. He's the chief economist with United Capital PLC, Mr. Ayodele Akinwumi. Thank you so much. It's good to see you again.
Thank you very much, Tolu. It's nice to be here.
Thank you very much. Well, let's get to business. MPC, we've been speaking off camera, but let's get to the real deal now. They opted to hold this rate, considering what's been on ground. But what do you think were the major factors? Again, let me ask you, as an economist, what do you think that influences the decision? And do you agree with the committee's assessment?
Thank you very much, Tolu, for having me again.
Yeah.
Yes, prior to the MPC, we usually release a pre-MPC expectations research note. I'm sure you got the last one.
I did.
Where we detail our expectations and the factors that the MPC members will need to consider and what we think they need to do. So what they did was exactly what we had in that notes. So it didn't come to us as a surprise, but necessary decisions they need to take at this particular time to ensure that we continue to have stability in the macroeconomic environment to tame inflation. Inflation, yes, dropped a little bit in the month of June. In line with global trend, you see Euro area inflation dropped. US inflation dropped in June. China dropped a little bit in June, and UK dropped again in June. However, at 15.91 is still very high. The central bank is targeting a single digit, maybe perhaps upper limit, 9%. And there have been a lot of studies that have been carried out saying that inflation above between 12.88 and 13% is growth retarding. Okay. And therefore, when you see inflation at that level, central bank will need to continue with their tight monetary policy stance to ensure that they tame inflation, which, of course, high inflation is not good for households, it's not good for businesses, it's not good for the government itself, and therefore, we need to maintain that stability. The issue around the, listen to your last guest, the issue around the US, Iran, in the Middle East, the war, also they need to be careful about how the pass-through impact of that war in terms of the energy increase, which of course was what drove inflation higher in the earlier part of this year. When we release our outlook for this year in United Capital Research, we're expecting that by mid-year, we will have single-digit inflation rates. Unfortunately, 28th February, the war started and the trend changed. So the policy that they have implemented is right, is good. We are in agreement with it, and it is necessary at this time to ensure that we don't erode the dividend of the policies of the measures they have taken in the last few months.
But given the current inflation outlook, again, you've talked about it, exchange rate dynamics and economic growth trends, was holding policy rates the right move, or did the MPC miss an opportunity to either tighten or ease the monetary policy, and why?
Okay, so growth at about sub 4%,
yes.
Tightening was not on the table for us.
Okay.
Because it's still going to stifle businesses. So if the central bank had raised interest rates, what it means is that it will make cost of borrowing more expensive. Small-scale businesses will not be able to attract the required funding to carry out their operations, which will not be good. We need growth that is even far higher than 4% at the moment for us to have inclusive growth in the country, to create jobs and to ensure that to alleviate poverty. Now, but lowering interest rates, in our view, was also not on the table because of the factors that I've mentioned earlier. Now, if the central bank had dropped rates, what it will mean is that they are not interested in fighting inflation that is still very high. Now, again, if you look at the part that if you have inflation rising in another part of the world, and then you drop the inflation prematurely in this place, there may be a capital flight. Yield may likely go up in the international market, and therefore, when you say that yields are coming down here, given the fact that we operate in an open economy, funds may likely move out, and then that could be detrimental to the stability we've had in the last few months and year on exchange rate.
Well, now what impacts now will you now? You've talked about impact on borrowing costs. We're looking at inflation. What impact will this decision have on investments, overall economic activities in the months ahead?
So for me, it's going to continue to strengthen investors' confidence that the central bank is doing the right thing. There are temporary pains, but then we need to stabilize the macroeconomic environment to ensure that we do not lose the gains that have been recorded in the last few months. Now, as we move on, the policy rate will not remain at the current level. I mean, people talk about 26.5, which is the current MPR rate.
Yes.
But then, a lot of businesses are borrowing below that level. Some corporates are borrowing at 19%, 20%.
Wow.
Even on the CP market, you see CPs in the last 2 months, CPs in the market are about 20.5, 22.5, which is not bad. All right? But we need stability in the foreign exchange market. If you remember what happened about 2-3 years ago, when there was massive depreciation on devaluation of the currency, and businesses sustained huge amount of losses. But we don't want to go back into that area again. We want to ensure that there is stability in the foreign exchange market. Investors can look at what the central bank is doing, and they feel that they are doing the right thing and have instilled confidence in the economy, and then to enable people to take short to long-term investment decisions. And that's what they are doing. And that's what I think they need to do for now until things stabilizes over in the international market, and then we're going to get the benefit from it here also.
What just came to my mind now is the reforms of the present administration. And we've gotten to a point where the likes of IMF and World Bank has been commending government. Also, you must stay the course and all of that. And just like the earlier guest said, we're getting to a point where inflation was on the decline before Donald Trump and the Iran issue came up, and we started seeing inflation go the other side. But the fallout of these reforms is still something that is, to me, worries everyone. People be talking about, how the vulnerable ones, how do they? So are there quick wins for government in any way to really address all of this? Because one way or the other, the impact of inflation is hitting on everyone's pocket. Buying a liter of fuel for 1,300 naira and paying transport fare, everyone seems to be complaining.
I do same. I buy.
I do too.
But it's part of the sacrifice that all of us need to make to get to where we are going to get to. We look at inflation trends in some other countries, in China, in UK, in the US and Euro area. Despite all the issues we've had from the beginning of this year to date, inflation remained within the range of 15%. The highest was 15.93 before it came down a little bit in the month of June. And that tells us, but in China, it went off from 0.2 to almost 1.4. In the US, it went almost as double to peak at 4.2. Now, these are economies whereby the central bank of those countries, in the US, the Federal Reserve is targeting 2%. So inflation moving from 2, which is their target, to about 4.2 is massively high. Now, it is because of the reforms, partly because of the reforms that the central bank is implementing, stable exchange rates, the fact that people now have investors, both local investors and international investors, have confidence in what they are doing. And what the federal government is also doing in terms of rebuilding the economy, the fabric of the economy, that is why we have moderate inflation rate as we have today. What I keep on telling investors and what I keep on telling people is that look at the opportunities that the current reform is creating. All of us are going through the pains, but then there are a lot of opportunities. Look at the stock market in Nigeria today, which is also a barometer to measure the performance of the economy. Year to date is over 50%. Last year, 51%. If you add the fact that last year exchange rates grained against Nigeria, grained against US dollar, then you will see that the dollar adjusted return for that all-share index is far higher than almost close to 60%. This year, we have had a time whereby they declared that Nigerian Stock Exchange was the best performer in the world because we have good rates appreciation, and then the exchange rate also went up against the USD. So all the reforms that the central bank is implementing and the fiscal authority are bringing together the gains we are seeing. They are building infrastructure, laying the foundation to ensure that they accelerate the growth in the economy, which is very good. Now, there are reforms in oil and gas. Today, Nigeria is supplying refined petroleum products to some parts of Europe.
Yes.
Aviation fuel,
fuel
we are supplying to Europe.
Yeah.
We are exporting. This is the first time such will happen in the, at least as far as I am, I was born in this market.
I agree with you.
Those are positives in the market. Government is saying, don't export raw material, add value to it. When you add value to it, what do? You create jobs in this place. People have jobs, people have more money, people are able to ensure...
The report, yes, that's on it.
So people are able to ensure that they are able to get, to move from poverty level, from unemployment to being employed. And so this may take some time. And like you said earlier, the IMF, the World Bank, Standard & Poor's, all the rating agencies are looking at what we are doing, and they are commending it.
Yes.
No gains without some pains. For me, I think, and at the federal, seems to be a lot of cooperations between the central bank, the monetary authority, and the fiscal authority is something that we need to commend.
True.
So the two of them are working together to incentivize relevant sectors of the economy that can drive growth, that can bring about sheer prosperity. What we just need to do is just to continue to look at the economy and think about where the opportunities are, and then take advantage of it. And within a short period of time, things will fall into right places and everybody will be happy.
Well, sounds really good, I must say. The CBN has emphasized data-driven approach to monetary policy. We see that clearly. Governor Cardoso is always very big on data. Which economic indicators do you believe were most influential in shaping the July decision? We've talked about that, inflation and all of that. But really, what do you think the committee should be watching before its next meeting in September?
Okay, so the primary responsibility of any central bank around the world is price stability.
Yes.
They will watch inflation.
Yes.
They will watch the drivers of inflation, at least the ones that are within the monetary policy confine that they have control over.
True.
They will also be, the central bank is also a banker to the federal government. They will also advise the federal government on appropriate fiscal incentive, fiscal measures they need to take to ensure that they tame inflation. For us, I mean, there are some that they don't really have control over, such as security, weather changes, because if there is flood away, agricultural produce, they don't have control over that. But federal government is also working with other international partners to ensure that we fight insecurities, so that there will be harvest. Now, they are also building roads, they are building rail, and to ensure that they transport things from the market, from the farmland to the market, reduce wastages. Central bank will continue to look at inflation rates. They will continue to look at exchange rates. How do we ensure that exchange rate is market reflective and is in a way that will not drive, inflation up again? They will also look at money supply. The growth in money supply now has been a bit very high, and they want to see how do we then tame this money supply to ensure that it's not in a level that can be inflationary, because, as you say, too much of that money supply in the economy that is not diverted towards growth will be inflationary. So those are various things that we need to continue to think about, to monitor. And when there is a window, and of course election is coming, people are talking about election spending, but
that's also one thing that might affect inflation.
Yeah, but if you think about it, from the last election cycle that brought the current president to power, you will say that there was shortage of cash.
That's true.
At that period,
and the election held.
And the election held. So the impact of that one is quite minimal. The impact of that is quite minimal. Our view is that as we go into second half of this year, inflation is going to moderate, barring any unforeseen circumstances from external sector. And that's why the central bank is being careful at the moment. So those are the variables they need to watch. They also need to watch growth number. The Q2 GDP number is due. Maybe anytime from now, the NBS will release that. Once those numbers, depending on the direction, Central Bank will implement policies to ensure that we stimulate growth, we create jobs, we bring about financial stability in the economy, bring about lower inflation rates, and then bring about predictable exchange rates that will also be friendly to businesses and households.
A very good place to leave it. But before we go again, as we move, okay, the next meeting is in September. Maybe one more before the end of the year we could have. I'm thinking that what will be your expectations for monetary policy? And if what changes, inflation figures changes, what would you be expecting? Do you think it's going to be an immediate thing for the CBN to alter it? And what are your expectations to the rest of the year for MPC?
Okay, so in Nigeria today,
yes,
and by extension the entire world,
yes,
1 week, 2 weeks is a long time. It just takes you to look at what is going on in the Middle East, and then the messages that are coming out from the United States, Mr. Donald Trump.
Yeah.
However, what we see is that there is a lot of confidence in the leadership of the current administration of the central bank. Investors, domestic, local investors, and international investors believe they are doing the right thing, and that transparency is there. The openness to discuss, to deliberate, and to discuss what they are doing is there. So I believe that as we move, once there is stability, external reserve $52 billion, which is enough to cover about 11 months of import. Yeah. Very good.
Very good.
If they feel that, yes, we are in a state whereby price stability is not compromised, then they will do what they need to do to stimulate growth, which is perhaps lower interest rates. But what they don't want to do is to be premature, to take decisions that are premature, that will not enable them to achieve that direction. It is not only interest rates. I mean, central bank, like I mentioned, seems to be a divergence between even where the MPC, the MPR is,
yes, and
then where some lendings are taking place in the market. But that rate at the moment is actually to say banks should not be so expansionary in a way that would then go and then be counterproductive to price stability in the economy. When the variables changes,
yes,
and to ensure that they can lower it, they will lower it. Mm-hmm. If it is to tighten, I don't see them tightening for the remainder part of the year, but who knows? We just hope that things fall together, and then they will be able to take decisions that will be good for households, that will be good for businesses, and they will even good for the government, and to stimulate growth.
Indeed, and so that people can the impact of the positives of these reforms is also something that is very, very important. Interesting conversation, I must say. It's good to have you on again. Mr. Ayodele Akinwumi is the chief economist with United Capital Limited. Thank you so much. United Capital PLC, I beg your pardon. Thank you so much for your time on the program. It's really good to see you again, like I said. Thanks for your time.
Thank you.
I hope to see you again soon.
Thank you very much.
Before the next MPC meeting, we need to do some discussions around economic issues.
No problem.
Thank you very much for coming to the studio.
Thank you for having me.
All right.